Okay, so it's just after 11, so I will get started with all of this. Okay, so hello everyone. Welcome to this webinar on how to understand your annual benefit statement. My name's Jennifer Rice and I work for Essex Pension Fund. And today we're going to be going page by page through the annual benefit statement and I'll be answering your most frequently asked questions. So this webinar is for people who are currently actively contributing to the pension scheme. So if there are any teachers joining us today, I'm afraid we're not discussing the teachers' pension scheme, so this isn't the webinar for you. So sorry about that. So there are a couple of housekeeping items to begin with. As you can tell, you've all joined with cameras and mics off. However, both the Q&A and the chat feeds are open. So I must ask you, because this is a public forum, please don't post any personally identifying information into the chats. So my colleagues Sarah and Taylor are going to be present to answer some questions. However, because there are a lot more of you than there are of us, we might struggle to answer all of your questions during the session. So don't worry, please do post your questions. If we can't get to you before the session's up, we will respond to you by email afterwards. So your question will be answered. I'll also be posting up our email address so that if you think of any questions after the webinar, or if you have a personal question that you want to ask us and you don't want it in front of anyone else, that's perfectly understandable. Email it to us privately. We will respond to you by email within 2 working days. So the webinar is also being recorded today. So if you have to step off at any point, you can't stay to the end, don't worry, you can watch it back in your own time. It will be on our YouTube channel. And again, I'll post a link to that at the end. So let's get started. Every year, we send you an annual benefit statement, and this tells you how much your pension is worth at the 31st of March that year, as well as a projection of what it will be worth at your normal pension age. The pension year runs from the 1st of April to the 31st of March, and that's why your statement runs up to that date. Although we do often get questions about, well, if it runs up to the end of March, why don't I get my statement to the end of August? Well, it's just because there is a huge amount of data we have to collect. So we have over 55,000 actively contributing members of the scheme who are employed by more than 700 different employers. We have to collect a lot of information, check that it's correct, upload it to your record, and then run calculations so that we can determine how much pension you've accrued this year. So it just takes us a little while to gather all that information, get it on your record, and then actually create the statement and post it to you. So that's why. But first things first, controversially, I'm going to start with what's not in your statement, because this is probably the most frequently asked question that we hear. So why aren't your and your employer's contributions shown in your statement? To answer that, you need to understand a little bit more about the LGPS and how it works. So the LGPS is what's known as a defined benefit pension scheme. This means it works in a really different way to a lot of other pensions that you might be more familiar with. In the LGPS, your pension is not linked to the contributions that you and your employer pay. It's not linked to any stocks and shares, so it's not vulnerable to the ups and downs of the stock markets. Instead, your pension is calculated using a set formula, which is based on how much you are paid. This means that your pension is incredibly secure and it grows in a really steady way. It gives you a guaranteed pension, which will be paid for life once you retire. And not only that, we add a cost of living increase every year once you have retired, and that cost of living increase is in line with the Consumer Price Index, or CPI. So it means that your pension keeps pace with inflation, so it won't lessen in value as you get older. So basically, because the contributions you and your employer pay don't impact on the value at all, we don't include it in the statement because that would just confuse matters. But let's look at the statement itself. So We actually have two slightly different booklets that get posted out depending on whether you joined on or after, so before or after the 1st of April 2014, because that's the date where the LGPS closed its final salary scheme and opened its career average revalued earnings or care scheme. The booklets do actually contain a lot of the same information, but for those of you who joined before the 1st of April 2014, there's a little bit more information included because you're in both the final salary and the career average revalued earnings scheme. So this is the booklet for those who joined after the 1st of April 2014. And this is the booklet for those who joined before. So you see, they look pretty similar, slight change because there's a little bit more information on this page. So let's take it from the top. I'm just going to get my little laser pointer out. Okay, so your personal details are shown at the top of page 3. If you need to make any changes to your name or your address, you just need to tell the pension fund in writing. We can't make those changes over the phone. So you can download a change of name or change of address form from our website, so essexpensionfund.co.uk. And then or you can write a letter, but we do need it to be hand signed so we can see what updates we're making. And if you are changing your name, if you could also include a photocopy or a photo of the certificate showing the change of name, so marriage certificate, civil partnership certificate, deed of name change, something like that, then we can get your record all updated. You don't have to post the items to us. You can scan and email them to us, or you can take a clear photo of your letter or form and attach that photo to an email, and we'll get that all updated for you. Now, the pension reference and the dates joined scheme are specific to the pension, each specific pension. So what I mean by that is the LGPS is an occupational pension scheme. So your pension is linked to your job. If you are paying into the pension scheme on more than one job, you have more than one pension, and you'll receive a separate statement for each one. So you get a separate statement for each job. So even if you change your job and you stay with the same employer, we close your previous pension and we start a new one for you. And each pension will have its own pension reference. Now, for most of the time, the dates joined scheme will be the same date for most people, but there are a couple of scenarios where you might see two different dates here. The most common is that you have previously been in the LGPS, you've left, then rejoined the scheme, usually through a new employment, and you've elected to combine your pensions together, in which case the date join scheme will be the date that you originally joined the LGPS with your previous job, and the date join scheme through current employer will be the date that you rejoined the pension scheme with your current job. There are a couple of other scenarios that come up sometimes. It's often if your employer has changed name, that will trigger our system to think it's a new employer. So we do see this if schools have become academies. There can be a change of name in that process. Our computer system just says, yep, it's a new name, that's clearly a new employer, and puts that date in. In those cases, it doesn't impact on the value of your pension at all. But if you're wondering where this extra date has come from, it's usually the date of the academy conversion. Moving on down to the summary of pension benefits. So this section, it's basically a snapshot, just giving you the headlines. So it's telling you, okay, this is how much your pension is, and this is how much it could be if you continue contributing up to your normal pension age. So with this one, we often get people going, seems a bit lower compared to how much I've paid in this year. What you need to keep in mind here is that this is not a one-off payment. Your pension is paid annually. So you don't take a pot and go and buy an annuity with our scheme. This is literally how much we will pay you every year from when you retire for the rest of your life. So if you say you retired at 67 and you decided you wanted to carried on paying your pension up to there. So sorry, I'm not explaining that very well. Let me start that one again. So say you retired at age 67 and you got this lovely pension down here that you contributed right up until then, we'd pay that to you every single year from when you retired for the rest of your life, no matter how long that is. So even if you make it to triple figures, we'll carry on paying. In fact, it'll actually go up each year because we'll add that cost of living increase to protect your pension from inflation. So it's not a one-off amount that's getting paid, it's that much possibly for sort of 20, 30 years. So that's why it looks a little bit different. The section underneath here is for automatic tax-free lump sums. So just to clarify, absolutely every member of the LGPS can choose to convert part of their pension in order to take a tax-free lump sum when they retire. However, if you were in the scheme before April 2008, you will actually have built up a separate tax-free lump sum that you have to take when you retire, and that will be shown here. So basically, the rules changed in 2008. So that's why it only applies to those members who've been with us for a really long time. So if you have joined after April 2008, then basically this will all show as zeros or it'll be missing entirely. But as I said, everyone can convert part of their pension in order to take a tax-free lump sum if they want to. So if you'd like to find out a bit more about how much you could take, there is a lump sum calculator, which is on the National LGPS website, which is lgpsmember.org. And that'll give you a good illustration of how much tax-free cash you could take. So you just need the figures from this statement, pop them in, and it'll give you an illustration. Alternatively, if you've registered for Member Online, you can actually run your own estimates, and that will let you play around and say how much tax-free cash you could take. So it's quite a useful little feature. So otherwise, if you're wondering why you don't have anything in there, it's probably because you joined after the date. But don't worry, because when you do retire, in our retirement paperwork, we do send you all of your options, including all those options for taking tax-free cash, but that calculator and the estimates online are available to help you with your retirement planning. Moving on to pages 4 and 5. So this is where we get into the nitty-gritty. So this is how your pension has grown over the year. Again, this is the version for members who are only in the care scheme. And this is the version for members who are in both the care scheme and the final salary scheme. So if we look back a second, you can see this box detailing your care pension is exactly the same on this page. It's just that we've added a bit more information to it. Now, to really understand this part of the statement, you do need to know how your pension is calculated. So let's take a quick look at that and then we'll come back to this page. I know this looks a bit complicated, but it is not. Don't worry, I'm going to talk you through it. So the LGPS has been around for a really long time, and the rules which govern how your pension works have been updated throughout the year. So it wouldn't be fair to change the rules of the game whilst you're still playing. So the pension continues to be calculated using the rules which were in place while you were building it up. So this means that the pension benefits that you built up in the final salary scheme continue to be calculated using the final salary scheme rules. So if you have been in the scheme for a little while and you have pension across different parts of the rules, we just calculate each separate element of your pension and then we add them all together to give you your total pension amount. So let's take a look at this top one, so the care scheme. So from the 1st of April 2014, every member of the LGPS has been in the care scheme. And this is actually pretty straightforward to calculate this part of the pension. So every year, your employer tells us how much you earned between the 1st of April and the 31st of March. So we take that annual pay figure and we divide it by 49, or 98 if you're in the 50-50 section of the scheme. We add that amount to the pension you've already built up in the care scheme, and then we revalue the whole amount by a cost of living increase, which is in line with inflation. It's usually last September's CPI figure, but the government does have final say on that, so we can't guarantee it, but it's usually that. And that calculation gives us your annual pension. So again, how much gets paid to you every year from when you retire for the rest of your life. But if you joined the scheme between the 1st of April 2008 and the 31st of March 2014, you'll also be in the final salary scheme. And the final salary scheme is just calculated in a different way. So we use your length of membership in that part of the scheme, multiplied by your whole time equivalent pay figure. So I'm going to talk a little bit more about that in a second. And then we divide it by a rate of accrual. So between 2008 and 2014, it was 1/60th. And that again gives us your annual pension. If you've been with us for a really long time, so you joined before April 2008, still in the final salary scheme, it's still calculated in the same way, but the rate of accrual was lower. So it was 1/80th, but you got a separate tax-free lump sum that was accruing at 3/80ths. So we just calculate each section, and then with your pension, we add them all together, and it gives us your total amount. Now, I know that the rates of accrual do trip people up because you're seeing the number get smaller, and yet here I am telling you you're getting more pension. But it's absolutely true. Rates of accrual work like fractions. So this is how the number that you're dividing something by. So the smaller the number you're dividing it by, the more you get. The best way I find to think of it is to do that classic, you have a big cake that you need to divide into a certain number of slices. If you have a big cake and you need to cut that into 80 different slices, those are going to be some pretty slim slices of cake. But if you have that same big cake and you only need to divide it into 60 slices, every slice is going to be that little bit thicker. And if you're only dividing your cake into 49 slices, well, there's a lot more cake for everyone. So I hope that makes sense. So as the rate of accrual, if the figure looks smaller, you're getting more pension for your money. So with that in mind, let's take a quick look back at the statement and let's have a look at the final salary section. So here we tell you your length of membership in each section of the final salary scheme. So you can see it's divided out between the pre-2008 and post-2008. Worth noting, if you were part-time or term-time only, this will not be your calendar length of membership in the scheme because it gets prorated down to reflect your part-time or term-time membership. Now, for the vast majority of people, your membership should not change because it runs up until the final salary scheme closed on the 31st of March 2014. Everything you've accrued since that date is in the care scheme. So most of you will see no difference, that your length of membership is now fixed. The only people who should really see a difference are those very few people who are still paying into added year contracts, where you were buying extra membership in the final salary scheme, and in which case you guys should still see that your membership is increasing as we add the extra membership you've bought every year. But for the vast majority of people, your membership is fixed. So the only thing that can impact on your final salary pension value is your pay figure. So if you ever open your statement and you think, hang on a minute, the final salary element, my pension's gone down. What's happened? Check your final pay figure there that's in your in the statement. It's over the next page and we'll look at it in a second. If you've had a drop in rate of pay, that'll be reflected there and will account for any drop. But most of the time, because most people's pay does increase steadily, even though perhaps not as fast as we'd like, you should sort of say, if it does look lower, it usually means that your employer has reported the wrong pay figure to us. Maybe they've missed an element out, or it's just a typo and they've inverted some numbers. It's not a problem, it can be fixed, but you just need to check with your employer. They'll double check what they've sent us. And if they do need to make any adjustments, they'll send us the correct figures and we can get your pension corrected. For the final salary part, it's not that big a deal because your final salary pension is actually calculated when you leave the scheme. There is a hint in the name, final salary. So it's actually your whole time equivalent pay figure for the final 365 days of your employment that will actually be used. But obviously we don't know what your final pay will be just yet. So we just use your current whole time equivalent so that you can see how your pension is doing and help plan your retirement. So that's the final salary section. And then we move down to the career average section, so the care section. You can see here, we start with last year's balance. So if you check last year's statement, you'll see your total care pension is this figure here. And then we revalue it by the cost of living increase and add that. So we add the inflation adjustment there. And then we add the amount of pension that you've accrued between the 1st of April last year and the 31st of March this year. So this person was lovely and simple. It's just they stayed in the main section of the scheme. They haven't transferred in any pensions. So it's literally just their pay for the whole year divided by 49. And that's added to it. And that just tops it all up and gives us the total. If you're buying extra pension through an APC, so additional pension contributions, it is included in the total, even though it's not in the breakdown. Unfortunately, our software won't split it out at the moment. We are working on that, and I know it's frustrating, but you will see it in the total amount, even though it's not in your breakdown. So once we've calculated each section of your pension and we've got the totals, we add them together. So it's worth noting you cannot take each element of your pension separately. It all has to be paid at the same time. So that includes your lump sum. You can't take a tax-free lump sum in advance of your pension. You have to have it all brought into payment at the same point. So that's how you read how your pension has grown in the year. But we also, because we want you to know, like, is your pension on track for the retirement that you want? We include a projection up to your normal pension age. Your normal pension age will be the later of either age 65 or your state pension age. So for the vast majority of people now, it will be your state pension age, which will be 66, 67, or 68. You are free to retire and take your pension from age 55. However, if you do take your pension before you reach your normal pension age, your pension benefits will be reduced for early retirement. We don't include those reductions in here because obviously that would be incredibly complicated and it wouldn't be very useful if you're looking back at your statement in the future. So not a problem. We just give you a whole pension here. Also, there are circumstances where your pension wouldn't be reduced, such as if you were retired on ill health grounds or if your position is made redundant. So worth keeping in mind. Now, the projection is based on the assumption that you will continue paying into the pension scheme up to your normal pension age at your current rate of pay and your current working hours and your current section of the scheme. So if you are in the 50-50 section, it assumes you continue in the 50-50 section. If you're in the main section, which is the vast majority of people, it assumes that you stay in the main section. So it is just a good guide. It also assumes that if you are buying extra pension or membership through an added years or additional pension contributions or additional regular contributions, it assumes you complete those contracts in full, so it adds the full value to that. So it gives you a very good guide of how much pension and automatic lump sum, if you're in that part of the scheme, you could get when you retire and helps you with your retirement planning. If you have previously transferred in pensions, okay, so if you've previously transferred in pensions, it's included in the totals. So the only time you'll see the transferred in pension over here is this. Most of the time these days, if you're transferring in a pension, it buys pension in the career average section, and you'll see it on the breakdown here in that first year. After that, it just becomes part of the total. And the reason is quite simple. The transferred in pension is treated in exactly the same way as the rest of your pension. It's not treated any differently, so it doesn't get split out separately. It's all part of the totals that are already here. So after the year that it's been bought, it's in that total there. So you can always check back against your previous statements and you'll see, oh yes, the amount is in there. But we do get questions why it's not there, but it is simply that it doesn't get treated any differently. So this section of your statement is actually really important. And I think some people do overlook it, but it's quite a key part. So this is where we show you your your pay figures that have been reported to us. Again, for those who are in the career average only scheme, it looks like this. And if you're in the final salary scheme and the career average scheme, it looks like this. It's because we use two different pay figures to calculate the two different sections of your pension. So if you're in the final salary scheme, the pay figure will be your whole time equivalent. So this means that if you are part-time or term time, this will be how much you would earn if you were able to do that job full-time hours over a full 52-week year. So if you are full-time and you work the full 52-week year, it will be the same pay. But yes, it's if you are part-time or term time, you'll see a difference. Also, things that were pensionable under the final salary scheme were a little bit different to what's pensionable under the career average scheme. So your whole time equivalent will include your basic salary. It will include any contractual overtime, but not non-contractual overtime. But will also include any pensionable allowances or bonuses, but not things like expenses. So check whether that is correct to you. And if you think that your final salary section of your pension is looking a little low, first thing to do is check this figure, and that's usually where you'll find the answer. With the career average, so this will include your basic pay, all your overtime, and any pensionable allowances or bonuses, but not things like expenses. You really should check your care pay figure carefully if you have had a period of reduced or nil pay. So especially if it is that you've been on child-related leave, or if you have been on sick leave or reserve forces leave, because what your employer should tell us in those circumstances is how much you would have earned in that period if you had been able to work your usual hours at your usual rate of pay, rather than what you actually received. So this doesn't include if you have additional unpaid maternity leave or adoption leave. That there's a different way for you to buy back any pension you've lost through a voluntary unpaid period. But whilst you're on child-related leave, say you were on statutory maternity pay, your employer shouldn't be telling us how much you were paid then. It's how much you should have been paid if you were able to work your role as usual. Again, if you think there's any issues with your pay figures, go back to your employer because they need to check the information. We don't have access to your payroll system. They'll check it. If they find that is the right figure, they'll be able to explain that to you. If they find that there is a mistake, they can send corrected figures to the pension fund and we can update your record. So it's all fixable, but you need to check it and tell us. And there's a little note down here that I know will have caught a lot of people's eye, and it is an important one. So I said on the previous page that you can retire from age 55, and you can at the moment. However, the UK government gets to set things like the earliest age that you can access your pension. And they have informed us that they intend to change that for all pension schemes from April 2028, so about 4.5 years' time, and it's going to push it up to 57. So that is something to keep in mind if you're in your 50s and you are thinking about your retirement. In 2028, the change is going to push back. The earliest you'll be able to access your pension is 57. So that will be affecting all pensions, not just us. So you'll start to see that messaging quite a lot. So this is quite a sensitive subject, but it's really important that you understand the death benefits which are included with your pension. When you pass away, the LGPS will pay death benefits to your next of kin, and they are formed in two parts. So a pension will be payable to your spouse or civil partner or cohabiting partner as long as they meet certain criteria. And that pension will be paid to them for life. That's shown here. If you die in service, it's actually enhanced up to how much the surviving partner pension would have been if you'd been able to continue contributing to the scheme up to your normal pension age. So that's only if you pass away in service. Otherwise, it's this one here. So there are also pensions payable to dependent children, so up to age 18 or age 23 if they stay in full-time education, and that includes vocational training. You do not need to nominate anyone to receive the pension. But these pensions, the recipients are detailed in law and they can't be transferred to other people. One thing to keep in mind is that if you have separated from your spouse or civil partner, but you have not yet completed the divorce, they will still remain the recipient of the surviving partner pension up until the divorce is finalised. So even if you have started a new relationship and you have a cohabiting partner, they would not be eligible for the pension until the divorce is finalised and that they then meet the criteria for cohabiting partners to receive the pension. So you can find more details on our website, essexpensionfund.co.uk, where we go into a bit more detail about what some of the qualifying criteria are for cohabiting partners. But essentially for the 2 years prior to death, you have to have been living together. But you also have to have been financially dependent or interdependent on each other, and you must have been living with each other as if you were spouses or civil partners, and not living with anybody else as if you were spouses or civil partners. You must also have been free to marry or form a civil partnership in that period. So we do ask for evidence, and that'll be things like tenancy agreements or mortgage agreements, council tax bills, utility bills or bank statements, just to show that you were residing together and that your finances were intermingled for the full 2-year period. So if you do have a cohabiting partner, please keep in mind, do you think they'd be able to access those kind of documents if they needed to provide them? So on the other side, the other part of the death benefits are a tax-free lump sum. It's called the death grant. Now, for death in service, it's calculated as 3 times your pensionable pay, your annual pensionable pay. So we give an illustration there. You can nominate anyone to receive the death grant. So it can be family, but it can also be friends, and it can even be registered charities. You can also split it amongst more than one person. You just have to make sure that the split totals 100%. Essex Pension Fund has the ultimate discretion over who receives the death grant, but we always take your wishes into consideration. So it's really important that you tell us who you'd like to receive the funds if anything happens to you. And it's important that you keep it up to date. So it's always in your annual benefit statement. So it's worth taking a minute and thinking, is this still who I would like to receive the funds if anything happens to me? If it's not, you can update it. So there's 2 ways. The most common way will be the expression of wish form. So you can get that from the resources section of our website, and you just complete it and return it to the pension fund. It must be signed by hand, but you can email the scanned copy or a clear photo of each side of the form to the fund so we can update your record. The reason it needs to be signed by hand and not electronically is a little bit morbid, but it's basically if anyone challenges our decision over who to pay the death grant to, being able to provide the document with your signature saying, yes, they signed it by hand, we're confident it was them, this was what they wanted to have happen, can absolutely nullify a lot of arguments and just creates a much easier process for your loved ones. You can also update the details on Member Online. So just log in and go to the My Personal Details section, and then you can just go through the online prompts there. But it is quite straightforward. Obviously, with Member Online, all your security metadata is saved so that we can be confident that it is you making that decision. So finally, we're looking at tax in your pension. So this refers to tax limits that apply whilst you're contributing to your pension. So HMRC does set limits on how much you can save tax efficiently through pensions throughout the year. And at the moment, there is still a lifetime limit, so how much you can save tax efficiently across your lifetime. However, you've probably seen in the media that limit is actually in the process of being removed. So we won't worry about that one for now. But annual allowance. Most people never exceed the annual allowance limit. However, if you're a very high earner, or if you've transferred in a lot of pensions, or if you have a lot of final salary scheme membership and then you have a big pay rise, you might trip over the limit. But don't worry, because if you exceed the limit, we will write to you and say you've exceeded your annual allowance limit in this pension. And we will tell you what you need to do next. In fact, we're actually putting together some videos at the moment which kind of take you through what is annual allowance, how is it calculated, and what do you need to do if you get a letter. So it's not something to worry about. It won't impact on most people, but if it does, we will be by your side to help instruct you on what steps you need to take next. So that's actually pretty much it. So I hope that it's been useful. and that you feel that you understand your statement a little bit better now. We have covered quite a lot in half an hour. So we've gone through how your pension benefits um, are calculated, why your contributions aren't connected to the value, how to update your details, and the death benefits that are there. Of course, it's quite a lot of information to cover in a short period. So if you do have questions, absolutely pop them in the chat, put them in the Q&A. We'll leave it open for a couple more minutes, and we will answer them by email after the webinar. Otherwise, you can email us directly. So epfevents@essex.gov.uk. That will take you to a small team, and we will guarantee to respond to you within 2 working days. But you can email us whenever and we will get back to you ASAP. As I said, I'm going to upload the video of this webinar to our YouTube channel, which you can go directly to with the address on screen. But if you just go to youtube.com and search Essex Pension Fund, it'll pop up as well. If you need any of our forms, or you want to know a little bit more about how your pension works, we have our own website, which is essexpensionfund.co.uk. Recommend you have a little look around. All the forms and guides and things are under the resources section, which I know isn't the most obvious phrasing, but we are trying to get that one changed. But yes, resources, and you'll find everything there. If you want the calculators, they're all on the national LGPS website, which is lgpsmember.org. But please remember, we are always on hand to answer your questions about your pension. There is never any need for you to wait for a webinar or an in-person event, although we love doing them. You can always contact us by email and we will always strive to answer your questions. So that's it for today. Unfortunately, there's not a Q&A session planned on this occasion, but we will add it into the next time we run this one. And we will circulate a calendar at the start of the year, which will show all the webinars we've got planned for next year. So we're just finalising that now. So I hope you found it useful. But if you have any questions, reach out to us. We will also circulate a quick survey. It will literally take you 2 minutes to give us your feedback. And if there's any topics you'd like us to cover in the future or anything you think we need to spend a bit more time on, please put that in the survey and we'd love to hear from you and see if we can improve our webinars for the future. So thank you so much for coming along today. Have a lovely rest of your day. In fact, I suppose now have a lovely weekend. And I hope to see you at a webinar again in the future.